right, there we go. Now we're live. I can see myself twice. Oh my God, I'm everywhere. What's up, y'all? All right, here we go again. I'm gonna teach y'all how to save thousands of dollars, which your loan officer's not telling you because they're too scared to quote a higher rate. If you're dealing with the lender, they're asking you to buy points right now, they ain't doing their job. All right, the number one thing we gotta know is how your finances are set up and what you're gonna be doing. But we as lenders, we're also professionals. Like we should know what we're doing. We should know what's coming in the market. So I'm going to show some historical data from Freddie Mac that's going to show you why you should take on a higher interest rate. And I'm going to give you a little bit of tips and tricks of how to ask for it and how to know if you're getting the best possible deal. It's not just about the lowest rate. That's what the banks want you to believe. They're screwing you over. All right, y'all. Check this out. What you have here, this is from FreddieMac.com. This is historic rates, right? Let's go all the way back to 2008. Everybody's tripping right now on where rates have gone, right? Oh my God, rates are in the fours. Oh, it's so crazy right now. But who cares? Like, all right, let's look at 08, right? Housing crash, boom, 6%. That's annual average. 09, 5%, right? Rates start to come down, 4, 6, then they kind of stay stagnant. But what happens in 2012? Drops to 3.66. All right, we want to make note of 2012, a drop in rates. But what's going to happen in 2013? Uh-oh, they went up. 14, they went up. And then they start to drop back down in 15. And what happens in 2016? Average rates drop again. Now look at when they're the lowest. Oh, damn, July, August, September, October, leading into November. Why is that special? Some of you already caught on where I'm isolating these years. 2017, rates start going up again. 2018, they go up. 19, they go down. 2020, well, this was a 2021 and 2020 were all-time lows, right? Rates in the twos. Look at that, 30-year fix in the twos. But what happened from 19 to 20? It dropped. And look again where the lowest points hit. Boom, we start to hit lows in August, September, October, November. Now this was an anomaly, right? Normally this would have started to creep back up here. But 2021 was absolutely bonkers for refinancing. Everybody was refinancing in here. If you didn't get to refinance 2021, hit me up. There's still some good deals out there. And they start to go up. So right now, as we're hitting rates, right, they don't have data for March and April, but they're already in the fours. I'm quoting some people in the fives, but what you tend to see, right, in the years that I isolated, 2020, 2016, 2012, those were election years. Those were election years. And so what happens is as you start to get towards an election year, your rate's going to probably go down. And so it doesn't make sense right now for you to take on a low rate when you can buy down your rate with $10,000 and oh my God, you might still get a rate in the threes. But what's going to happen? In 2 years, you're going to have to refinance anyways. Barry Habib was like the freaking Nostradamus of lending, right? So we're going to see rates in all-time lows in 2024, right? Very likely right now, even though you still haven't heard it, you hear inflation, probably haven't heard recession, you haven't heard stagflation, which is, I believe, the state of the economy that we're in. I'm not a financial genius, or a financial planner by any means. You know, just the average dude that knows lending. But very likely, right, if history tells us anything, is that right before the election, rates are going to come back down. So everybody who's buying right now, who's taking cash out of their house and is so concerned about their interest rate, is really just screwing themselves over. To take on the highest rate you can get and ask the lenders for lender credit. I just did this on my purchase. When rates were in the high threes, low fours, I took a rate of 4.6. And I had the lender give me back $9,000 for my closing costs. And so it's a very simple equation. If buying down my rate It's going to cost me $10,000. And the buy down of 10,000, let's say it saves me $200 a month. I mean, it's $2,400 over a year. But if you're only going to hold that mortgage, right? Assuming you were to close right now in March of 2022, your first payment's due in May of 2022. And 2 years from now, you'll have saved $4,800 on interest. But history tells us, right behind me, Freddie Mac, it's public, y'all can go look at it. Y'all can go study history for yourself. The rates are going to come down. You're going to be calling your lender for another loan because you're going to hear your neighbor say, dude, I just refinanced and I got a 2.875. You're like, fuck, we're at 3.875. And so you're going to go and you're going to refinance. You're going to be jumping in joy. You're going to be super happy. But you're going to forget that you paid 10 G's for that 3.875. It doesn't make sense. You lost out on $5,200 potentially. What you need to be doing is you need to be doing the analytics behind the scene and telling your loan officer what your goals are. But if you're not going to sit in the property for more than 2 years or 3 years, and getting the lowest rate doesn't matter. The banks are super excited that everybody advertises low rates. They don't want you to know this secret. They don't want you to know that in reality, you buying down your rate is a bad financial investment. Today, I'm telling everybody, go tell your lender to increase your rate and get lender credit and cover your closing costs. Now, if we were at rates where rates were in the twos, we're at 2.2, be a different conversation. Let's buy down your rate at that point because rates aren't going to get lower than that. So now it doesn't matter because I'm going to hold that rate. I'm going to hold that rate for the next 20 years. I'm going to make my money back on my upfront capital investment. But not today, not right now. Probably not in 2022 and probably not in 2023. Be smart, y'all. Make the lenders pay for your closing costs and put it into your interest rate. And don't let them fool you by making you assume that you got the best deal on the market because you got the lowest rate out there. It means you're dealing with a rookie. It means you're dealing with somebody who doesn't understand history and how it's going to affect the next couple of years and how rates are going to come into effect in the next couple of years. After we get through all this inflation nonsense and the Fed's rising rates, they're going to have to re-stimulate the economy. You're going to have an election year, and what's going to happen? They got to have money back into the economy. How are they going to do that? Housing. That's what they did in 2020 and 2021 when everybody was losing their shit. We're refinancing everybody. We're dropping mortgages. We're putting more money back into the economy. Everybody right now is cashing out equity. It's going to put more money back into the economy. It's going to be an easier way for them to recover. And they're going to use people like myself, people on my staff, all my lenders out there to help put cash in people's pocket. They're going to lower rates. They're going to give you an opportunity. You just got to start prepping today, or this move. If you're not thinking about 2-3 years from now, and you're just thinking about what feels good today, that low interest rate is like a McDonald's cheeseburger. It feels good while you're eating it, but when you're done and you think about it, it costs you the 6-pack. I should know. Look at this. Just don't let them lie to you. If you have any questions, just shoot me an email, tony.pelayo, AP Mortgage. You want me to review a loan estimate for you, tony.pelayo, apmortgage.com. You can want to email my work email, pelayohomeloans@gmail.com. Don't let anybody take advantage. We're here to protect your money.